Okay, it was a better day yesterday. A lot of things happened yesterday which actually turned the tide around, and I'm going to speak to you about those things. But despite everything that happened yesterday, I think it's not a good time to be buying Bitcoin now. I'm going to show you exactly why I don't think it's a good time to buy Bitcoin now and what I'd rather be doing instead. And I think it's probably going to shock you when you see what I'm going to be doing. So that's what I want to talk about now. I want to talk about what changed yesterday that made it so good, but why I don't think that you should be buying Bitcoin. Let me know in the comments why you think I'm saying that you shouldn't be buying Bitcoin now. I think what the real reason will actually shock you. The real reason will actually shock you. Either way, yesterday was a much better day, not only for Bitcoin, but it was actually a much better day for Solana. Look at Solana back at $135. It was a much better day for the NASDAQ. The NASDAQ also had a much better day yesterday. Just look at that green candle for yesterday. And I think if you look at the reason why the NASDAQ actually went up yesterday, the reasons are quite blatant and they're quite strong. The first reason why it happened is because the odds of a Fed rate cut on the 10th of December actually shot up. Remember, at one point, the odds here were like 50-50. And now the odds are like 82% in the form of a rate cut. I'm going to show you guys exactly why the odds have gone up that much, and I'm going to show you why the market yesterday, or why the Nasdaq actually started to celebrate. But before we do that, I need to ask you guys for a quick favor. I can see there's only 140 likes, and when you like this video, it really helps me get distribution. So please take 1 second, smash the like button. Let's see if we can increase the likes. And if we increase the likes, what you'll see is that the concurrent viewers start to grow watching the show, and that's all because of you guys. So please smash the like button. I'm going to carry on bringing you guys alpha. I'm going to carry on showing you guys why I think that it's a bad time to buy Bitcoin, but also why the odds of the rate cut probabilities went from 50-50 to almost 82% now in favor of a rate cut. And the big reason there was because, remember I said to you on Friday that the Fed, the Fed Reserve Governor Christopher Waller said that that he was ready to increase rates. Well, yesterday, so on Friday we had Williams from the New York Fed. He turned around and said he would be supportive of a rate cut. And now more Fed presidents are turning towards a rate cut, including Williams, including Waller, including Fed President Mary Daly. She now says she's supporting of cutting rates. So what it feels like is we went from a situation where they said, look, there's no data, therefore there's not going to be rate cuts, to a situation where they're all going, look, we're ready to cut rates. We're going to start cutting rates. And so now there's an 82% probability of rate cuts in the next meeting. I want to look past the next meeting though, because I think that that's quite important. So what the market's telling you is that even if we cut rates this meeting, for the next meeting in Jan, which is, the meeting in Jan is a tricky meeting because it says Jan, but it's actually the 28th of Jan. So it's pretty much like the beginning of Feb. And the next meeting is only in the middle of March. And what we know is that for all three of the meetings, they will hold rates, or the next two meetings will hold rates consistent. And the market only perceives another 0.25 happening in April, but it's not actually April. It's the 29th of April, which is almost May next year. So basically, what the market's saying is between now and May next year, there's only going to be one rate cut. And I think I concur with that, but it all depends on the difference. The thing here with the May rate cut, which is with the 29th of April rate cut, is that if and when that rate cut happens, that'll be the last FOMC where we actually get Powell. Because in May next year, we're going to get the new Fed president, whoever that new Fed president is. I mean, obviously, we think we know who it is, but it's probably Stephen Mirren. But if it's not Stephen Mirren, well, then we'll see who it is. But ultimately, that will be Powell's last rate cut. The other thing that happened yesterday, which was quite big and why the markets actually went up yesterday, and I know you didn't feel it in the crypto markets, but if you were looking, for example, at the stocks bubbles, right, and you looked at all the stocks yesterday, the stocks yesterday went absolutely crazy. It was a massive recovery day. If you look at Google in the last week's been up 14%, and in the last couple of months, Google's actually doubled, right? So what happened on the stock market yesterday? One was the rate cut change in heart when the more Fed presidents came out and spoke about rate cuts. The other thing that happened yesterday was that President Trump and President Xi had a phone call yesterday. Trump, obviously, on True Social, every time he has these positive calls or whatever else, he came out and said, look, I had a very good telephone call with President Xi of China. We discussed many topics, including Ukraine, Russia, fentanyl, soybeans, and many other farm products. We have done a good and a very important deal for our great farmers, and it'll get better and better. Our relationship with China is extremely strong. And he went on to basically say that in April next year, he's going to go to Beijing. Now, that's the ultimate sign of, hey, buddy, we're friends, is we are going to, if Trump concedes, to go to Beijing. And so right now, we've taken this whole China FUD and the tariff FUD and this Cold War between the US and China. And it seems that Trump is really becoming the peace president and that he's brokered a very, very, very good deal with China. At the same time, today, what we've heard, which is quite big, I think, is that they've agreed to a peace deal framework. So there's the terms to a framework for the Ukraine-Russia conflict to potentially end. Now, I think it will end. I definitely think Trump will end it. But I'm not sure that it's going to be this easy. I think there's a framework in place, and there's still going to be quite a few things to actually bash out. But either way, when you look at the markets and you say, okay, we've got lower rates. We have President Xi and President Trump on really good terms. We have the Ukraine peace deal ending. You have inflation. Now, the PCE inflation, which was supposed to come out this week, isn't coming out this week. It's coming out on the 5th of December. Remember, that personal consumption expenditure is the same measure that the Fed use to measure inflation when they decide on whether they should reduce rates or not reduce rates. Reason why this is such a big announcement is because this data that comes out on December 5th, and the FOMC meeting is on December 10th. So you kind of had this coming out before the FOMC meeting. In the meantime, the producer price index actually came out, which was the PPI. As it relates to the PPI, we got a 2.7% PPI. The forecast was between 2.6 and 2.7. So I've seen some people say that the forecast was 2.6. Other people said that the forecast was 2.7. So ultimately, we came in with a PPI, let's just say, around where we should have been. And there's no panic around inflation. What you'll also remember is that yesterday, when we spoke, I said to you, look, the one thing that really worries me is that we get the GDP data. And the reason why I was worried about the GDP data is because the Atlanta Fed forecasts that GDP should be 4.5% or 4 point something percent. We don't want a hot GDP, because if we get a hot GDP, then effectively what you're saying is, look, the economy is overheating or firing, and therefore don't reduce interest rates. But when we get something like this, which says, look, don't worry, guys, there's no GDP data actually coming out, we can basically, like, this has basically been a bit of a life raft for us. So that's some of the good news in yesterday, but it's not the crypto good news. In crypto, there was another little piece of good news, which I think is really good news. And I don't think that the market has yet really acknowledged the how good this news is. And that's because I don't think as many people in the market have been watching the market as closely as the people in Frontrunners have been watching the market, right? We have an analyst team in Frontrunners. They've been watching the market very, 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 very closely. In fact, one of the big trades that they caught is the fartcoin trade. Now, I know there's not many trades, but they caught this massive fartcoin trade. But that's not what I'm talking to you about here. The reason why what they've been catching the other day is they were amongst the first people to realize that there is only really, or it feels like there's one entity or one group that has been selling. So they made a massive analysis on how, when you look at the US opens in the last couple of days, the thing that's been hitting the markets, and I know you've all realized this, is that every time the US market opens, there is sales. This is a chart that came out of the Frontrunners group. And they've been analyzing this data, and part of this data analysis shows that every single day since, I mean, we only went back on this chart to the 10th of November, which is the last 2.5 weeks. But every day, as soon as the US opened, the price of Bitcoin lands up going down. Regardless of what the stock market does, the price of Bitcoin has been going down until yesterday. And so up until here, we kept saying, or the people in Frontrunners, the analysts in Frontrunners basically said, look, something's going on in the United States. They're not the only people that have said it, right? If you look at 𝗙𝗏 from Multicoin also had a similar analysis the other day. I wonder if I can quickly find that tweet first. So yeah, it says, it feels like a big force seller in the market. We're seeing a systematic selling during specific hours, probably a consequence of 10 out of 10 liquidations. Hard to imagine this scale of force selling will continue much longer. So you'll notice that he spoke about this on the 19th of November. In Frontrunners, though, I mean, we've been tweeting about this since the 10th of November, right? And we've been talking about this since the 10th of November because there has been a seller, and every single time the US market opens, this seller starts selling. Now, what that means is possibly that there is a massive liquidation, or probably that there's an entity in the US or an entity that has assigned another US entity, because it's US hours, to basically sell a whole lot of Bitcoin on their behalf. Now, why? Could be because they were liquidated, could be because they were a casualty of October 10th, could be that they're just a big seller. Regardless of that, though, what we noticed yesterday was that it was the first day that the seller didn't kill the price when the US market opened, which means that the seller might actually be out the way. And if my theory here is correct, we had a massive seller. This one seller was really keeping the market down. It could have been a casualty from October 10th. But either way, we're seeing now that on the US market open, the market hasn't gone down. Now, I want to quickly just check that today, the market hasn't gone down much in the last hour. I don't think it has. There's a tiny candle, but that's not the type of candles we've been seeing on every other market open. So there's a good chance that the seller is gone. And I want to show you something else here quickly. I want to show you something else here. If you look at the Coinbase premium. Now, the Coinbase premium shows whether there is more demand or more supply for coins on Coinbase. Since the beginning of November, you can see the Coinbase premium has been largely negative. That means that there's a big seller in the US on Coinbase trying to sell his coins. What you can see is that Coinbase premium is starting to close. This all ties up with the fact that a big seller or big sellers are now moving out the way. So the next step was that, after I looked at this data, by the way, here's a better look at that data if you're looking at it. You can see that the Coinbase premium is really starting to close. I looked at whether it could be the ETFs. It could be, like if you look at the flows of the ETFs, the big ETF exits are pretty much finished. And it looks like we've had a day of 238 inflows and 151 outflows. So it looks like the selling pressure is finished. And kind of like if you look at the bubbles, you can see that today was a much better day. Did you see the rain chart? 119% this week. Rain is that prediction market that I spoke about. Remember Fefe and I set up that bet on the prediction markets? So, I don't know, when I spoke to you about this had a $4 billion FDV. It's now got an $8.5 billion FDV. This was that prediction market where anyone could create a prediction market. And the reason why it's running like this is because yesterday they announced that, and actually announced that one of their board members is like an ex-Italian prime minister. I think a prime minister or president. Anyway, regardless of this good day that we're having, or better day that we're having, it does feel like the panic is gone. And I think I should quickly look at the crypto fear and greed, because I believe that if we look at the crypto fear and greed, the crypto fear and greed is getting a bit better, but still in extreme fear. We're starting to break out of extreme fear, which is quite good. And it does again tell us that we're seeing some kind of bottom. But listen, let's talk about some kind of bottom. Either way, you want to talk about like feeling better, not feeling better. The truth is that, if you've been in crypto for the last year or so, regardless of whether we're bouncing now, whether the worst is over, it feels like we've actually been walking through a war zone. I know exactly how you feel, and I don't blame you for how you feel, because that's the performances of our tokens this year. Let's just call a spade a spade. You got Bitcoin down from January 14.5%. You got Ethereum down 12.5%. In the top, how many tokens? Let's quickly look here. How many tokens this is? 100 or 50? If you look at how many in the top 100, or the top 57, I don't know, weird number the researchers chose here, but in the top 57 tokens, only those are actually up, right? So So, and even the ones that are up, like, okay, PancakeSwap's up 1%, that doesn't count. Mantle's up 3%, that doesn't really count. I mean, very, very, very few tokens have gone up. And actually, the majority of the tokens have actually been absolutely, just look at Jito, look at Jupiter. These are like down 80% this year. And so, look, I mean, maybe the technical analysts are right. And maybe this is the end of the 4-year cycle. I mean, yeah, they could be right. But I think we need to call a spade and say that maybe there was some kind of 4-year cycle for Bitcoin. Maybe, and maybe the technical analysts are right here. But when it comes to altcoins, like, there was not an altcoin bull market. In fact, 2025 has been a terrible year. It's been a bear market for altcoins. Not even can you say that it was a bull market. It's been a bear market for altcoins. And it's been a very steep bear market for altcoins. And so my conclusion here is that maybe there was a 4-year cycle. Probably there wasn't a 4-year cycle. Probably it was completely coincidental. And if there wasn't a 4-year cycle, or if there wasn't a 4-year cycle, then what the hell is actually going on? I think that the 4-year cycle is actually a lie. And I'm going to make a video about the 4-year cycle being a lie on the other channel. I think the 4-year cycle is just related to liquidity, and it just so lined up that increased liquidity came in the Bitcoin 4-year halving cycles. If you look at the liquidity cycle now, we haven't had increased liquidity. In fact, increased liquidity only starts on the 10th of Feb, so to speak, because that's when quantitative tightening ends. And if you want to be like really pedantic about it, if you really want to be pedantic about it, you can say, even quantitative tightening is not increased liquidity. It is just not taking more money out of it. So it leaves you to start thinking about, if there's no 4-year cycle, then who the hell's right here? Because, I mean, okay, maybe the technical analysts are right. As I said here, there's a battle between the technical analysts and the liquidity cyclists. Maybe it was coincidental. Maybe the technical analysts were right. Even when you talk about technical analysis, I want to say that the technical analysts didn't call the correction. They just counted the number of days and said, it's the halving cycle. So you can't actually even say that the technical analysts were right here. You can say that the halving cyclists were right, not the technical analysts. Because the technical analysts would have told us that there's a long way to go in Bitcoin. They would have told us that the RSIs hadn't peaked. They would have told us that there were, I mean, I don't remember seeing any like real tops on Bitcoin, barring one, if I'm not mistaken, which I'll show you in a couple of secs. Actually, let's see if I can call it up first now. Okay, so barring that we hit the top of this channel over here, barring that we hit this, like you can kind of say if you extend this line over here, all right, we hit the top of that channel over here, okay? That effectively would have called the top on that day. But failing that, it comes down to the halving cyclists versus the liquidity cyclists. One team believes that there's a halving cycle, and one team believe in a liquidity cycle. And this time, for the first time, the two don't line up. In the last two halving cycles, in the last two halvings, the quantitative easing and the stop of quantitative tightening lined up with a 4-year cycle. In this one, it doesn't really. And so I think that's going to make for a very interesting video, which I'm going to make, and I'm going to drop on the other channel just as soon as I'm finished all my research there. By the way, the video that I told you that I was going to make about exposing the correction and the MicroStrategy JP Morgan Donald Trump thing, that's dropping tomorrow. I finished shooting it. The guys are editing it, and it's dropping tomorrow. It's going to be dropping on Crypto Insider. Anyway, so going back to it, I think we can all agree that there hasn't been an altcoin run, and in fact, the altcoin run is the altcoins have been in a bad bear market this year. Okay, so if that's the case, then why do I say that it's not a good time to buy Bitcoin now? Because it's not a good time to buy Bitcoin now. That's what I said at the beginning of the show. And the reason why it's not a good time to be buying Bitcoin now actually has to do with the liquidity cycle. And now you're going to say to me, okay, well, if the reason not to buy Bitcoin now is around the liquidity cycle, well, what do you mean? Because quantitative tightening is ending on the 10th of December. And if quantitative tightening is ending on the 10th of December, and Bitcoin is reflexive to quantitative easing or to the end of quantitative tightening, then why not buy Bitcoin now? So let's start with the assumptions. The first assumption is, let's put the 4-year cycle aside for a second, and let's just go into the camp of the liquidity cyclists. And the liquidity cyclists say that Bitcoin and crypto are the most reflexive assets when quantitative tightening ends and when quantitative easing starts. They will be the ones that move the quickest. You can hear this from 𝗙𝗘𝗔𝗧𝗨𝗥𝗘𝗗. 𝗙𝗘𝗔 Wood is clearly not a halving cyclist. She is a liquidity cyclist, okay? So let me play it for you.
Maybe it would become half the market cap of gold. It would take some share from gold or maybe expand the market. Well, that market has doubled. So I don't think our bull price should change all that much. And I probably should have been quicker to say all things equal on CNBC the other day. So I just wanted to clarify that. We are very bullish on crypto assets, but we know that they are the most susceptible to liquidity drawdowns. And I described earlier, we have a number of reasons for liquidity drawdowns now, but we think that they will be cleared by the end of the year. And hopefully by December 10th, when the Fed eases. Okay,
so you heard that, right? So she said, we believe that crypto assets are the most reflexive to liquidity drawdowns. We've had a lot of liquidity drawdowns. What were the liquidity drawdowns? Remember the TGA account, which was getting filled, and they overfilled the TGA account? Well, let me quickly just get you let me see if I can get you the TGA account. Yeah, here we go. So there's the TGA account. And I think that if I can zoom in here and show you this, let me just quickly find a way to zoom in here. Okay, I think that'll take us close enough. Okay. What you'll realize is that the TGA account topped at about 957 million, and they've actually reduced it. This chart doesn't take us to live, but they've actually started reducing. This chart, you see, only takes us to Wednesday, the 19th of November. But they've actually started, here they were taking money out of the economy, and now they're putting money back. The second thing is that in December, the 1st of December, quantitative tightening ends, so less money being taken out of the economy, which means that in a few days or in a few weeks, we're basically going to be getting a bounce here, right? And so that's why I said to you yesterday that my thesis is that what's going to happen now is we're going to start seeing a 2021 type. Well, I said yesterday, we're definitely going to start seeing a bounce. But then the question is whether we get a 2021 style recovery, where we get a higher high, or whether that bounce just gets rejected. Raoul Pal is pretty much in the same camp as me, right? So what he says, utterly brutal crypto market with relentless, rapid positions unwinding and rumors swirling after a 10 out of 10 impaired market maker in balance sheets, leading to less liquidity and someone blowing up. It reminds me of 2021, when in a 4-week period, Bitcoin fell 56% and ETH fell 62%, Solana fell 68%. Then it sharply reversed and exploded to new highs. That's the theory that liquidity cyclists actually have. Now, I'm sticking on the side of liquidity cyclists because that for me is the fundamentals, right? So, and what the fundamentals or what the liquidity cyclists are basically saying is, look, you stop QT, Bitcoin starts running. You start QT, and Bitcoin drops. And that's basically what happens every single time. When global M2 money supply drops, or when QT starts or whatever else, well, then Bitcoin actually goes. And that is the only thing that Bitcoin is reflexive to. And everything else is completely coincidental. And that's exactly what I think is going to happen. That's exactly what I think is going to happen. And when it does happen, I think that Bitcoin is going to catch up to the global M2, and we're going to get a massive explosion. And that's going to take us up to higher highs. And it's going to take us up above the high that we've been at and to a 2021 style explosion. For those of you who are wondering what the 2021 style explosion looks like, it's that. And I believe that right now we're sitting somewhere here. But I'm still saying to you, don't buy Bitcoin. Weird, right? Do you know why I'm saying don't buy Bitcoin? Because I want to show you a different chart. Because the chart that's more interesting right now is this chart over here, which you can't see because I can't share my screen. Now I can share my screen. So this chart over here is the more interesting chart for me. And this chart over here is the others versus BTC. Others is the smaller altcoins, and it is compared to BTC. Now, there's two things that I want you to notice here. The first thing is I want you to notice this trend line. And I'm going to zoom out a little bit more onto the weekly chart because I just think it'll give us a slightly better view. Have a look at that trend line. That trend line is probably better on the daily. Okay, let me try and zoom a bit more. It's very hard to zoom with this cursor, which is my problem. Let me see if I can auto fit that. Okay, so long story short, look at this line over here. I'm going to go back to the weekly just so that you can see it a bit clearer. But this is the others versus BTC chart, which is you take the altcoins and you divide the altcoins by BTC. And basically what it shows you is when the altcoins are outperforming BTC and when they're not outperforming BTC. So in this period, altcoins were outperforming BTC. In this period, altcoins were outperforming BTC. In this period, altcoins were outperforming BTC. Now, I want to show you two things about this chart. The first thing about this chart is, if you look at this chart over here, this chart is bouncing off this trend line from 2017, this is a very, very, very big trend line from 2017. The second thing I want you to notice about this chart is I want you to notice this circle on this chart over here. What is the circle on the chart over here? That is when quantitative tightening ended in 2019. Now, we don't have any more data sets because quantitative tightening has only ended ever twice. And when quantitative tightening ended, what you realize is that actually the big event here, by the way, the quantitative tightening ended on the 31st of July, which is exactly over here. The one thing that happened when quantitative tightening ended was that the altcoins actually started to outperform Bitcoin. So that's why I'm saying to you, I think that if you are a liquidity cyclist, then you shouldn't be betting on Bitcoin. You should be betting on the altcoins. Because what you know is that when quantitative tightening ends and when liquidity gets much bigger, the altcoins are much more reflexive than Bitcoin, right? You can see it over here as well, right? So here's the others versus BTC chart. That's the day that quantitative tightening ended, and that's when they started bouncing. And it went up the top, barring the COVID correction over here, right? When quantitative tightening ends, the altcoins bounce much higher than Bitcoin. And right now, we are on this exact trend line. That's the others versus BTC. And what this is telling you is that you can probably expect a line off this trend. You can probably expect a bounce off this trend line. And so when QT ends, it could mean that effectively when QT ends, we're going to get another little run. But the run this time isn't going to be on the altcoins. The run this time is on Bitcoin. It's actually going to be on the altcoins. And so when I started the show, I said to you guys, right now, I don't think it's a great time to buy Bitcoin. And the truth is I don't. Because if you're in the side of the technical analysts, if you're one of these, we're in a bear market, we're going into a bear market. If you are like a Michael Burry type, then to be honest, your bear market's confirmed and you shouldn't be buying Bitcoin. Because if you are Michael Burry or if you are a technical analyst and you think that the bull market's actually over, then you got to say to yourself, well, when we get into bear markets, from the time that we top until the time that we bottom is usually a year. I mean, look at that. That's the top. And then we bottomed. And that was 400 days or 392 days or something like that. Which means that if you're a technical analyst, you think that for the next year, we're going to be going down. And therefore, you shouldn't be buying Bitcoin. And therefore, your action is either be short or no action at all. Okay. If you believe that there's no cycle and you're a Bitcoin maxi, and then, well, like you're a sailor type, then buy Bitcoin, that's great. But then the truth is, if you're a liquidity cyclist, then the idea is to say, look, buy good quality alts here. Because if you really, really, really have a strong thesis, then buy the good quality alts, because the good quality high FDV alts are actually at very, very, very good prices. NEAR, Athena, Canton, Zcash, Hyperliquid, Solana, BM, they are at very, very, very good prices. And they haven't had a run. In fact, that they've been on a bear market for the last year. And if that's the case, then why would you be buying Bitcoin, which is only 15% or 20% above its high, when you know that when quantitative tightening ends, it's the altcoins that actually run? And so what I'm saying to you is, you've got to pick your side here. If you have little conviction, buy Bitcoin. If you're a technical analyst, great, then go short, because then you believe the market's over. And from the time that the bull market ends until we get to a bottom, it's usually a year. And it happens every single time. It happened in 2017 as well. And so it's let's just go back to 2017. Let me show you the exact math from 2017. There's your top. There's your bottom, 361 days. Okay? Again, 2021, just for those of you here, top, bottom, 363 days. Top to bottom is a year. The good news is, guys, that if you are technical analysts, we are already 2 out of 12 months into the bear market. If you're a liquidity cyclist, then what you know is that liquidity is better for altcoins than it is for Bitcoin, because crypto assets are way more reflexive than Bitcoin to liquidity, right? And so, therefore, your best bet is to go into the top quality alts, which are cheap. If you're an absolute degen, right, then just do an Alex Beck or do a Murad and start buying meme coins now. Just SPX 6900, SPX 6900. Just do that. So you really got to pick a team now. Either you're going to be short, and either you say you got conviction, the bull market's over, you're going to remain short. Or you're just a Bitcoin maxi and you're always accumulating Bitcoin. And then, to be honest, it doesn't matter. Just keep accumulating the Bitcoin. Then you're Michael Saylor. Then if you believe that in liquidity, then you know liquidity is better for altcoins than it is for Bitcoin. And you know the altcoins have been destroyed by what was one of the worst corrections of all time, by altcoins. And if you're an absolute degen, then just keep buying meme coins. Or someone should just phone Murad and just say to him, look, bro, this meme coin thing's finished now, bro. It's finished. Anyway, I'm not going to phone him. You can phone him if you want to phone him. So it comes down to picking a team. It comes down to backing a horse here. Are you a liquidity cyclist? Are you a technical analyst? Or are you a halving cyclist? Take your picks and place your bets accordingly, because now you know where to place your bets. If you are a Bitcoin maxi, put your money in Bitcoin. If you are a technical analyst, go short or don't do anything. If you are a liquidity cyclist, then you should be going into high quality alts now, because they've been obliterated, and alts will bounce much higher when liquidity increases on the 10th of December. That's pretty much how it is. Let me know what you think, and let me know what kind of cyclist you are. Okay, let me know what kind of cyclist you are. Meantime, let's just see how many spaces are left. Okay. On frontrunners, there are 151 spaces left to sign up. If you want to catch, this special won't make it to Black Friday because it's Tuesday today. Guys, trust me on this. Sign up to frontrunners. We're never going to discount it like this ever again. It's $1199 for the whole year versus $2,400. Let me just refresh this page because I think the new links are going to be here. Okay, so sign up to frontrunners, because once those spaces are gone, it's going to go back to $2,400 a year. I guarantee you will make that money back in the first couple of months. The next thing that I want you to look at here is 247 terminal. So, usually 247 terminal usually it would cost you like $2,400 a year. You can get a year subscription for 1189. This is one of the most powerful tools that there is to trade with, right? I don't know if you guys remember the news terminal, but it really is. I'll show it to you now. Let me show it to you now. My terminal's opening. It takes a second to open. But remember, I traded a lot. Oh, look at the news. You see, that's why I stopped trading on this thing, because it just drove me mad. So what is the news terminal? The news terminal serves you news in a matter of milliseconds from reliable sources. And what it does is it effectively allows you to trade directly from the terminal. So if I see a trade and I want to take the trade, I basically just click. Okay, I don't know if I've got money in the account, but whoa, look how fast the news is coming out. Okay, I'm long. Oh, okay. So there, as you saw, I was long monad there. Now I don't want to hold monad, so I'm quickly going to close it. It serves you news in milliseconds, and you can make huge money trading this news terminal. What I suggest is go and have a look at the news terminal. There's a link here to the news terminal. But more importantly, there is a I'm doing a news trading workshop on Friday. So if you click that link over there, it'll be your invite to join us in a news trading workshop, so you can see how to make money. If you guys want to take advantage of these Black Friday specials, guys, they will not be here after Friday. Go now, sign up to Frontrunners, sign up to 247 Terminal, and if you want to sign up on both, there's a crazy offer, which is $2199 for Frontrunners and the news terminal, which would save you $2,600. I think that's the best offer. Yeah, I mean, look, I think the Frontrunners offer is crazy. 151 spots left. I think it's absolutely crazy. Sign up to Frontrunners. Trust me, it'll be the best financial decision that you've made, guys. Alrighty, I'll see you guys again tomorrow, my cyclists. Until then, trade well, my friends.